Well, everyone, we have made it to the end of another day of trading, and man, was it exciting. Was it volatile? We had some ups, we had downs, there was a lot of news, a lot of moves, and the big play that I had set up for today was Nvidia. They have announced earnings. I might as well just let you know that they killed it. Let's see if Robinhood has updated that information. It has. You can see that they came in $1.80 per share. However, this is just the top line numbers. They also did really well in terms of growth, and they smashed expectations. Well, I don't know if smashed, but they beat expectations across the board, which is great. So the overall market declined today. Nvidia did as well. And I just want to highlight something. The purpose of this video is to review and to look at credit spreads and why you shouldn't panic when some of the moves may be happening. I have two credit spreads on Nvidia. I want to highlight right here that our total return right now is showing a negative 24.55%, and most of that coming today, and the value has dropped dramatically. Now, what I want to highlight is why I'm not worried and why you shouldn't necessarily, if you see the value of your contract go down, pull away immediately. So again, for me to hit my maximum profit, I need Nvidia to stay above 340 by the end of the week. So let's look at one of these plays. The one in question I'm going to be looking at is my put credit spread right here that I purchased yesterday. As you can see from this information right here, we had one contract. This is again a credit spread. So that is the buying and selling of a put to benefit me. So someone is paying me for these rights. So as you can see, I purchased the 325 put, or the one that was farther out. So it is farther out of the money. And I purchased that for $2.59 a share. However, I sold a put for $3.50 a share, which is, again, that's what's crediting me. So I paid someone $259, but someone paid me $350. So all of this information, I was paid the difference between those two, which is $91, and I actually put that limit price in at 80, so I was actually happy that I ended up doing this that well. The reason I did 80 is because I really wanted this to be bought very quickly. It was right before the closing. So why is this losing value? What is making that change here? If we scroll up, you're able to see the different values for these contracts. So if I'm actually able to click on that spread, which is here, you can see that it is going up. So if I purchased it for the average credit of $91 or 91 cents a share, and it's now gone up all the way to $119 or $1.19 a share, you can see that I have this relatively bad total return of minus 31%. However, I want to highlight what this actually means and how you actually make money from a credit spread. Okay, so as you can see, we have our handy dandy options profit calculator. I'll put this link again. I love this feature. You can see the Nvidia price. This isn't up to date because this is as of market close. You see my options that I got here for the 22nd. Here's my graph range. I'm going to hit calculate, and these are all the different ways that this can be calculated. The reason that I highlight this information is because oftentimes I see new traders will look at this, and as soon as they start seeing these subtractions, these minuses, like for example today, start seeing those losses, as those accumulate, then you start saying, hey, I need to get out. I need to pay my money. There's still the risk. How many of you have done that, and then when you looked at the stock later, it went from 346 to now 358? And again, for Nvidia, that's not a crazy move for them to make, and you went from, because you sold out here, you lost $36 where you would have been net positive 62. So the reason I highlight this is because the way that you earn money on these credit spreads, yes, you can get rid of this premium. Let's say it shot up and you wanted to take advantage of this because it's near the max you would have made anyway. That's fine, I get it. However, when you're looking at this play right here, the price tomorrow could be 330.01, and or it could even be 330.01, and as soon as 4 p.m. Eastern time hits, I get $91 for this play. So this is one of the key ways that you can earn income, and I'm telling you, do not run from it. So another easy example that I want to highlight or that you can use is I've already done a credit spread in here for Bank of America. This is Bank of America's. Again, it's a easier play to make with a smaller account. So you've got the price, you've got a put in June for $21.50 and $20.50. And as you can see, you're getting paid $23 to hold this. And look at this huge options chart. I want to highlight that the stock price could go below $21.30 this entire time, and it'll tell you, hey, this is bad. However, if the stock finishes at $21.30, you'd still get $3 because it's that date of expiration. So just because this value is showing this is bad, that doesn't mean you necessarily have to run away from it or get out of that spread. So as we look at Nvidia tomorrow, we're probably going to see this is probably going to benefit me. We're going to see a huge IV crush going into options. Again, these were not traded up until this point. Look at the premiums associated with these, and that's largely because we have a huge implied volatility. They expected that big move. There ended up not being a huge move right here, so I'm excited to see that this is probably going to turn out very well as long as we don't see anything crazy in terms of what happens in the market tomorrow. However, with that stock price, again, I'm hoping we continue to see this rise up a little bit. As long as this stays above 340.01, I'll walk away with $224 from these 4 options. And this is a play I made 2 days ago, and this account is only standing at about $1,000. So you're going to see at the end of the week, as long as nothing else changes too much, that we're going to see this jump up to probably around $1,200. Again, this today I'm not really going to count because it's all these plays that were made yesterday. So ignore this because these are going to jump up and hopefully stay up tomorrow. So that is a credit spread and why I think you should not run just because you see a negative number right here. Just be aware and track it and know what's involved in that number. So thank you everyone. If you found this content helpful, please leave a like and subscribe. Thanks. Talk to you later. Bye.